Hello, this is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors. We're coming to you today to give you a review of the first quarter of 2026 and then what we see in the near term as we move through what's been a very volatile environment for investors to start off this year. So let's dig right into what we saw in the first quarter. Well, first of all, we saw volatility spike to levels we haven't seen since Liberation Day last year. We saw some indices around the world on the equity side fall into correction territory, which is a decline of 10% or more. We saw bond yields rise. Investors were contending with the war with Iran, private credit fears, a hawkish central bank, and then another government shutdown. Now, when you look at this chart, it shows you that within the U.S. markets, the big declines were seen in technology, the NASDAQ, your large cap growth sectors. The small and mid cap sectors held up better. Now, while they were also subject to some of the weakness after the U.S. invaded Iran, they still withheld their gains for the quarter. When you look at global equities, the All Country World Index actually saw its worst quarter since 2022, but emerging markets were able to end relatively strong because they are tied to the commodity markets, and the war with Iran created a lot of volatility in commodities. When you look at fixed income, the Bloomberg Aggregate Index, it fell for the first time in 5 quarters. And you would think that bonds would serve as a safe haven in a geopolitical tension. But instead, the rise we saw in oil prices increased inflation expectations. It also priced out Fed rate cuts. So anything that had duration to it, and then anything tied to private credit, which became a big headline story in the first part of this year, these areas were weak. So you can see leveraged loans. Short-term bonds and floating rate bonds actually ended the quarter positive. And in the commodity market, I don't have to reiterate it, but it was an energy story. The Bloomberg Energy Index up almost 60% for the quarter. Precious metals also were higher, but we did see quite a bit of volatility in gold prices during the quarter. They did not serve as a safe haven either. And the dollar got a little bit of strength in the quarter, primarily because we saw some higher interest rates, and it did serve as a safe haven in this geopolitical time.